Hey everyone, welcome back to Corporate Decoder. Today, QETA just filed an 8K, and I am spotting a key move that gives them more time for their big deal. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is taking a small step to buy themselves more time, and it tells us something about their progress toward merging with another company. Alright, so what we have here is a Form 8K filed by Quetta Acquisition Corporation. Think of an 8K as a company's way of telling the public about big, important things that are happening right now. It is like breaking news for investors. And the big news here is about an extension. The company originally had until the 10th of July 2026 to complete what they call an initial business combination, which is basically a merger or acquisition. That date has now been pushed back by 1 month to the 10th of August 2026. How did they get this extension? Well, they put an extra $60,000 into a special account called a trust account. This account holds money that was originally raised from selling shares to the public. By putting in this money, they are essentially paying for more time to find and complete a deal. This is a pretty common tactic for what are called special purpose acquisition companies, or SPACs, like Quetta Acquisition. They are shell companies formed specifically to raise money and then find a private company to merge with, taking that company public. Now, before we dive deeper, let's look at what kind of stock this company has. They have units, common stock, and rights. You can see their common stock trades under the ticker QETA on the Nasdaq. This is important because it tells us they are a publicly traded company, and these filings are meant to keep investors informed. Another quick note here, Quetta Acquisition is checking the box that says they are an emerging growth company. This means they get to follow some slightly different, often less strict, rules for reporting to the SEC, especially about financial disclosures. For companies like this, it is common because they are typically newer and smaller when they go public through a SPAC. So, the key takeaway from this filing is the extension. Companies that are SPACs often have a deadline to find a merger partner. If they don't find one, they have to return the money to the shareholders. This month extension gives them a little more breathing room to get their deal finalized. It signals that they are working on something but haven't quite crossed the finish line yet. Now, looking at the broader picture for Quetta Acquisition Corp as a SPAC, its entire existence hinges on successfully merging with another company. The fact that they needed to pay for an extension suggests that negotiations or due diligence for their target business combination may be taking longer than expected. This isn't necessarily a bad sign if the deal is complex, but it does add a bit of uncertainty. Historically, when SPACs need multiple extensions or seem to be struggling to find a deal, it can sometimes precede a less favorable outcome for shareholders, like a deal that is priced too high or even a complete failure to merge, leading to liquidation. For example, we've seen other SPACs go through several extension phases, and those often didn't end with a successful merger at a valuation that benefited early investors. On average, many SPACs that don't find a deal within their initial timeframe and have to resort to extensions often see their stock price struggle. A typical SPAC post. Merger often sees a significant drop in value in the year following the deal, especially for smaller companies. The risk here for investors is that the delay could mean the target company is having second thoughts, or there are significant issues being uncovered. On the flip side, it could just mean they are ironing out the final details of a really strong deal without knowing the specifics of the target company. It's hard to say for sure. What I'm actually looking for is any announcement in the coming weeks about the actual merger itself. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.